Hello and Assalamu alaikum everyone. Welcome to Advanced Audit and Assurance Practice to Pass session being organized by ACCA Pakistan. I am Kashif Kamran, your tutor. Now just before formally starting on with the Practice to Pass session, I would first like to introduce myself. In terms of my tutor profile, I am Kashif Kamran, a fellow chartered certified accountant. I am associated with teaching the ACCA qualification since over 11 years now. I'm currently engaged with the Bani School of Accountancy, which is a platinum approved learning provider of ACCA in Karachi, Pakistan. In terms of my core specialization of teaching the ACCA papers, I do teach Advanced Audit and Assurance paper and also the Strategic Business Leader paper. One of my distinct style of teaching is my exam-focused teaching style. And for a paper like Advanced Audit and Assurance, that is very, very important because ultimately your success in Advanced Audit and Assurance exam depends upon exam-focused. And if you have an exam-focused teaching style, that really supplements the pass rates of the Advanced Audit and Assurance exam. My students in the previous sessions have attained place winner positions, not just in Pakistan, but outside Pakistan, in UAE, and even in just the recent exams in September 18, my student got positions from Saudi Arabia and from Iran. Some of the students even scored good marks and they're still waiting for their place winner confirmations in different parts of the world. But some of my students from UAE have already confirmed positions from Saudi Arabia and even from Iran. Okay, now let's formally start on with the practice to pass session for Advanced Audit and Assurance exams. Let's set the agenda and let's set the objective very clearly. Now, in terms of this practice to pass session, which is for December 2018 examination, this practice to pass session is spread on 5 days. Today is the first day, and that is the 5th of November. And this session will end on the 9th of November, which is the 5th day. Each day, I'll be meeting you from 6 p.m. to 8:45 p.m. the Pakistan Standard Time. So you can check down your local times to join the live session. Now, the agenda which I have set for each day is as follow. On the first day, which is today, I'll be discussing with you risk assessment. The day tomorrow would be the day focused on evidence. The third day, which is on the 7th of November, I'll be focusing on ethical, professional, and quality control issues. Then on the fourth day, I would be focusing on other assignments. And finally, on the fifth day, I will be focusing on reporting. So this is the agenda of the 5 days. Now, before I start on with my first day agenda, which is risk assessment, let's first set some of the prerequisites and some of the objectives of this session very clear. The objective is to help you practice in exam context, considering the do's and don'ts of each core question which comes in Advanced Audit and Assurance exams, along with emphasize on the marking scheme to ensure you are not writing more or less and completing 100% paper. So I hope that is one very important thing in Advanced Audit and Assurance exam is completing 100% paper, and you can only complete 100% paper if you know the marking scheme of the paper very clearly. So you are not writing more, you're not writing less, rather you're writing only how much should be written. And that is the only guarantee you will be completing 100% paper on time. So that is my objective of the next 5 days of this practice to pass session. Now, the paper format. All of you are aware that the Advanced Audit and Assurance exam has a changed paper format since September 2018 exams. The paper is now divided into two sections, Section A, Section B. The Section A consists of a 50 marks question and the Section B consists of two 25 marks question, and the paper is all compulsory. There is no choice in the paper. So you have to attempt all the three questions. The Section A consists of 150 marks question and the Section B consists of two 25 marks question, which is the question number 2 and the question number 3. Now let's scan the paper basically to identify exactly what you expect in a Section A question and what you expect in a Section B question. Now when you look at the first question, which is of 50 marks, it contains topic like risk assessment. It contains topic like ethical, professional, and quality control issues. And it includes topic like practice management. Practice management like writing procedures in the exam paper. Now we know procedures is a very regular feature of the question number 1. Getting a question on ethical issues and professional issues is again a very regular feature of the question number 1. And obviously, risk assessment is the core part of the first question. So in the first question, you are breaking down the first question in terms of three very important topics here: risk assessment, ethical, professional, and quality control issues, and number 3, the practice management. Syllabus area A, B, C, and D will come in section A, but can also be tested in section B. So examiner says that your syllabus area A, B, C, D is basically meant for the section A, but you can also find it in the section B, but the chances of that is less. Yes, the only topic you can find in the section B is ethical, professional, and quality control issues. It can also come in section B. And even the practice management. The practice management can also come in section B. But risk assessment is in the question 1, right? Risk assessment is the section A. Risk assessment cannot come in section B. So, but ethical, professional, and quality control issues can come in section B. Now, if any one of you has given the September 18 exam and has flunked the September 18 exams, you must be knowing that the ethical, professional issues was in the question number 1, was in the question number 2, and was in the question number 3 of the last exam sitting. It was in all the 3 questions. So you can understand the significance of this topic. So question number 1 contains a question on ethical and professional issues. The question number 2 contains a question on ethical and professional issue. And the question number 3 also contain a question on professional and quality control issues. So there was a significant testing of ethical, professional, and quality control issues in the last exam sitting. So that is the breakdown of the first question. Then in the section B, one question has to be on reporting. That's must. You cannot get an advanced audit and assurance exam without a reporting question. That is must, right? And even in the last exam sitting, it was the question number 2, which was on reporting. And the question number 3, as per the examiner, has to be on other assignments. And that was true with the last exam sitting in September 18. One of the question, that was the question 3, was on other assignments. So examiner is saying the syllabus area E and the syllabus area F, which is basically reporting and which is basically other assignments, will only come in section B, will only come in section B. So you cannot expect reporting coming in section A. You cannot expect other assignments coming in section A because the examiner is saying will only come in section B. So you should be knowing the paper structure very well. You should be knowing that what comprise of section A and what comprise of section B. And you should know the syllabus areas, that which syllabus areas will be hitting your section number A and which syllabus areas will be hitting the section B very clearly. So please go through the paper format and go through the syllabus areas so that you exactly know which syllabus area will be coming from which area. So this is the paper format which was changed from September 18 exams, and this will be the second exam sitting now in December 18, which will be on the new format of the paper. And I will be starting today with risk assessment. So that means I will be focusing on the section A today, which is a 50 marks question. Now that's my agenda for the first day today. My agenda today is risk assessment. Now I have carefully planned the first day for the December 18 practice to pass session, considering my previous sessions. Now you can see my previous sessions and the hyperlink is given through which you can access my previous sessions, which are available on the ACCA Pakistan channel on Vimeo. So you can access my previous practice to pass and prepare to pass sessions for practice on other questions. Now already in the March 18 practice to pass session, I have done the December 14 question number 1. In the June 18 exams, in the June 18 session, I have already done the June 13 question number 1 and the December 14 question number 1. And then in the September 18 practice to pass session, I did the December 15 question number 1. So I'll not be repeating them. Rather, I have chosen a new question for this session, which is December 17 question number 1. So I'll be focusing on December 17 question number 1 as as a question to practice today in the live session. Now, if you want to access my previous sessions and previous questions which I have done in the practice to pass, you can access them through this link, and you can take the practice notes of December 14 question, June 13 question, and December 15 question. So I have already addressed the audit risk in previous sessions. I have already addressed the risk of material misstatement and business risk in the previous sessions. So you can take more guidance from my previous sessions. But for the session today, I've chosen the December 17 question number 1 because it will give us both reflections. This question will give us reflection of the business risk, and this session will give us reflection business risk and risk of material misstatement. So you will get both the dimensions in my live session today. You will understand the business risk, you will understand the risk of material misstatement, and the question in focus will be December 2017 question number 1. You have home assignments which you can do after the session ends today, which is December 12 question number 1 and which is June 18 question number 1. So after the live session ends today, you will have the December 17 in focus, and apart from that, you will have December 14, June 13, and December 15 from my prior sessions. So you will have ample material to practice through the previous webinars conducted. Okay, let's come closer to the start of the December 17 question number 1. Now, there are examiner articles which I would be recommending you on a daily basis, which you should be reading. For your ease, I have given you the hyperlinks of the examiner articles, which you will be exploring, downloading, and reading. Now, for the first day today, I am recommending 2 articles. Number 1, do read the examiner article on exam techniques, part 2, part 3. I hope you have seen the 5 exam techniques article. So the exam technique article part 2 and the exam technique article part 3, which is on risk and which is on accounting issues. You have to read them. They are such productive articles. They're such excellent articles that if you read these two articles, you would be so clear. You would be so clear on attempting a question on risk, and you would be so clear on how to address the accounting treatments. So you have to read both these articles, which are exam techniques article part 2 and exam techniques article part 3. See, if you visit this ACCA website and you see the technical articles, right here in the technical articles, you can see the part 2. The part 2 is the risk. The part 3 is the accounting issues. So you have to click on them, download them, and read them. They are such productive articles on the subject we are discussing today. So please ensure that you are reading these articles as a must. Okay, let's get back to the presentation. So these are recommended articles, right, for my day 1 today. Okay, now let's start with the main agenda. Now, each day when I meet you, I will first be putting like half an hour on building up the concepts. And after I build up the concepts, I will start drilling an exam paper. And in the last 15 minutes of the session, I will give you an opportunity to put your questions. So if you have any questions pertaining to the topic which we are doing today, you will have a 15 minutes opportunity in the end of the session where I will just be interacting with you and answering as many questions as I can within the 15 minutes, right? So if you have any questions, do raise them, but please do raise them in the last 15 minutes once you have listened to my lecture. So let's first start with concept building, followed by drilling of the past papers, and then your question and answer session. Okay, now in terms of the drilling and drilling of the business risk and drilling of the risk of material misstatement. Firstly, if I start with a business risk understanding and I tell you how you could be good on a business risk in exam paper, the very first thing you have to do to be good on business risk is that you need to identify an issue from a case. Now you will say, which issue should I identify from a case? You should identify an issue from a case which is capable of having an adverse effect on the business objectives. You have to identify an issue from a case which is capable of having an adverse effect on the business objectives. You have to be clear what business objectives are, and you have to be capable of what an adverse effect on a business objectives is. Now, just before I explain you that in more depth, you have to identify an issue and you have to think that what will be the adverse effect of this issue on the business objective. And the effect can be both in future or can be in present. The effect can be as of now, the effect can be as of today, or the effect can be as in the future. So if you identify an issue, you will think, what is the effect of this issue on the business objectives? You have to ask a question to yourself that if I have identified an issue, why have I identified the issue? What is the effect of this issue on the business objectives? Whether that is the effect as of today or whether that is an effect as of future. So you have to be very critical of that. Now, let's understand this. Right, this is my Word file which I will be using on a daily basis. I have already shared my sketch answers with you. So This is a Word file I'll be using on a daily basis, and this can be shared with you on the WhatsApp group. And you will be getting the link of the WhatsApp group during the session today. Now let's understand something. Now, when we speak of business risk, and business risk says you have to identify an issue which is capable of having an adverse effect on the business objectives. And the adverse effect can be as of today, and the adverse effect can be as of future. Now think clearly. Right? I'm using the short form BR. BR is the business risk. Now, if you just imagine a business risk, it is an issue which is capable of having an adverse effect on the business. Which issues? A business risk is connected with so many things. Number one, the business risk can come from the nature of the business, nature of industry, because there are industry specific risks. Each industry have unique risk. There has to be industry specific risk. So in a case study, if you are capable of identifying an industry specific risk, that's very important. So the business risk can come from the nature of industry. It could be the industry specific risk. Number two, it can be from the business risk can be a strategic risk for the business. A business risk can be a strategic risk for a business. A strategic risk for a business? Yes, a business risk can be a strategic risk for a business. For example, wrong decisions. The director took a wrong decision. Wrong strategies. The business sets wrong strategies. Wrong decisions. Wrong strategies. Wrong decisions. Wrong strategies. Not just wrong decisions and wrong strategies, also pestle. Risk which comes from external environment is a strategic risk. Risk which comes from the port of five forces is a strategic risk. So a business risk can be a industry specific risk, or a business risk can be a strategic risk, can be a risk arising from a wrong decision, or a risk arising from a wrong strategies. It could arise from pestle. It could arise from port of five forces. Then that's not the end of the story. A business risk can identify can be identified from financial risk. That is a very major risk for a business. Financial risk. A financial risk can be a business risk. Now, what can be financial risk? Gearing risks, liquidity risk, the company's cash flows, the cash flow positions of the company, and profitability. There is a decline in the profit margin of the company. The profit margin of the company is going down each year. The profit margin and the profit margin going down for the business. So the gearing risk, the liquidity risk, the cash flow positions, the cash position of the company, the profit margins of the company, and the profit margins are going down can itself be an issue in a case study. Then think about operational risks. There can be so many operational risks within the case study. Operational risk. Risk, risk which relates with the supply chain, risk which relates with the supply chain of the company. Operational, any supply chain issues, any issues within the supply chain of the company, right from the procurement to the after sales. That is a very big risk, right? Operational risk. And the last one, compliance risk. Such an important risk, compliance. So when you are looking at a case study and you are thinking about a business risk, you have to read the case and you have to see the issues in the case. Issues which are capable of bringing an adverse effect on the business objectives. And that's very important. So a business risk can be industry specific, and a business risk can be something from a strategic risk, can be a financial risk, can be an operational risk, can be a compliance risk. This is just an illustration which gives you insights on what a business risk could be. Now just imagine, what are you doing in the exam paper? First of all, in the step number 1, you are identifying from the case the issue which give rise to business risk. You first identify from the case the issue. Which issue? Step 2, the issue which is capable, which is capable of adversely impacting the business objective. Now, the issue which is capable of adversely impacting the business objectives. Now, you have to be careful here, right? Because a risk without impact is useless. So you have to tell examiner what is an adverse impact on the business objectives. Now, you might say, what are business objectives? The business objectives is a very long list. The business objectives are reputation. The business objectives are profitability. The business objective is customer retention. The business objective is stakeholder relationships. Stakeholder relationship. The business objectives is the market share. The business objective is the competitive position. Competitive position. So there can be so many business objectives. Anything which is capable of having an adverse impact on your reputation, on your profitability, on your customer retentions, on your stakeholder relationships, on your market share, on your competitive positions. These are some examples, right, of business objectives. So you have to identify an issue which is capable of having an adverse impact. And in the step 3, the adverse impact can be in present or in future. So the adverse impact can be as of today, and the adverse impact can be as of the future. So the adverse impact can be in future or in present. Now, fourth step, step 4, know how much business risk to write. Know how much business risk to write is equal to total marks available divided by 1.5 marks per business risk, right? As per the new marking schemes, the business risk is worth 1.5 marks, not 2 marks. Because in the December 17 exams, the marking scheme, which is the most latest question updated, the marking scheme used by examiner is 1.5 marks per business risk. So total marks available divided by 1.5 marks. And you know how much business risk to write. Now understand that you have 1.5 marks where you have 0.5 marks to identify the issue which give rise to business risk. So if you identify the issue which give rise to business risk, you will straight away get 0.5, but you will get 1 mark. You will get 1 mark for explaining why it is a business risk, and its adverse impact, on the business. And honestly, this is where students are very weak. All of you are capable of identifying, but all of you are very weak with the 1 mark, explaining why it is a business risk. And in my session today, once I start the drafting, my focus has to be why. Because to me, your success depends upon why. You cannot be successful in advanced audit and assurance exam if you don't know how to write why. Any one of you who is weak on why will struggle passing the paper. And if any one of you is good in explaining why, not just in business risk, right, in every question, because each question you have to tell why. And if your why is weaker, you will struggle. So business risk honestly is not something difficult, right? Because you just have to read a case, identify the problem, then think what is the adverse impact of the problem on the business, whether the adverse impact is in present or is in future. Then see how many business risks should I be writing. See the total number of marks. Divide that by 1.5. Half a mark for identifying the issue. 1 mark for explaining why it is a business risk and its adverse effect on the business. And I'll just be demonstrating that once I start writing the answer. And that's the reason that in this practice to pass session, I have only given you sketches, because I would not like to give you a pre-seen answer. I want to give you a sketch so you concentrate in the live session and see how am I drafting the answer? How am I writing the why answer? I want you to concentrate. So I have not given you any pre-seen answers. Rather, I've just given you a sketched answer. And I'll be filling the sketch answer live in the session so that you really benefit how to write why. So I've just changed my strategy. So this is exactly what you have to do, right? So this is how you have to go down with business risk. So the business risk can be industry specific. The business risk can be strategic. The business risk can be compliance. The business risk can be financial. The business risk can be operational. You have to identify that from the case study. Please, you cannot take hypothetical assumptions when identifying the business risk. You have to be contextualized. Please remember that very carefully. No, no hypothetical assumptions will leave you nowhere in P7, will leave you nowhere in advanced audit and assurance. No hypothetical assumptions. No hypothetical assumption. You have to be close to the case, close to the context of the case, close to the context of the case. And the more closer you are to the case and the context of the case, your survival rate is high. You cannot take hypothetical assumptions. Examiner don't like that. You have to be close to the case, close to the context of the case to get pass. And one last thing before I start practicing the business risk. This is the golden words of the examiner. It is the application of the knowledge. It is the application of the knowledge, not the knowledge itself. It is the application of the knowledge, not the knowledge itself, which will enable you to pass the AAA paper. These are golden words of the examiner. It is the application of the knowledge, not the knowledge itself, which will enable you to pass P7. You learn this. You say, okay, I was taught that the business risk is operational, the business risk is compliance, the business risk is strategic, the business risk is industry specific. Your survival rate could be lesser because it is the application of the knowledge, not the knowledge itself. You cannot go to exam hall with rote learning. You need to know how to adapt yourself. If you are capable of adapting yourself, you have a high chance of passing the advanced audit and assurance paper. So any one of you who is adaptive has a high chance of success. High chance of success. So let's see who among you is good in adapting. And the one among you who can adapt will surpass the 50 marks very easily. And any one of you who are not capable of being adaptive, you will struggle. So these are some fundamentals, right, of the business risk, which you should have in mind before we start a question on business risk. Right, let me go back for just 1 minute on my presentation for business risk. Okay, if you look at my presentation of business risk again, I was at the bullet number 3, the effect, the bullet number 4, why it is a business risk, what is the impact on a business objective. So I just mentioned that right in my lecture, why it is a business risk and what is the impact on business objectives is the key to score. So if you cannot write the impact, then you will struggle. So the key to success is writing the impact on the business objectives, right? So I'll be performing a live question so that you get ease with this and you get to know how to write a proper business risk answer. And I've just mentioned each business risk is worth 1.5 marks. So these are key points I thought I should share with you in the session for business risk. And I'll be sharing the key points of risk of material misstatement once I start practicing the risk of material misstatement in the later part of the session today. And you have to read the article of the examiner, the part 2. The part 2 is on risk. And in the article of the examiner, if I just show you that for 1 minute, if you see this article of the examiner, which is right here on the page number 3 of the article, you will find a paragraph from where the examiner starts writing something about business risk, which is this paragraph. So when you download this article, which is the article of exam technique part 2, on the 3rd page of this article, you will find a heading business risk. And if you can start reading from this point downwards, you can be really good on business risk. And I'll be using this article on and off in my session today, just to give you the do's and don'ts of your examiner on business risk. Right. Now, the question I will be using today in my session for attempting business risk has already been shared with you, and that is from the December 2017 exams, because you will learn more once I start writing the answer. So I have given you the steps, right? This is a question which is right in front of your screen. You should be having a hard copy of this as well, because I will be going on and off this question because I'll be using the word file in terms of writing the answer. But this is the question which came in December 17, and this is the last published question on business risk. So this is the most latest question you can get on business risk through your past papers. Now, if you just look at the requirements of the question, the first requirement says evaluate the business risk facing the group. And we have 10 marks. And you have to divide these 10 marks with 1.5 marks. So the very first requirement you're looking here is evaluate the business risk. So evaluate the business risk, and the marks given to you is 10. Then in the second part, something we have to do in the second phase of the live session today is identify and explain the significant risk of material misstatements. So in the second part, we'll be discussing the significant risk of material misstatements. Significant risk of material misstatements, and again we have 10 marks allocated to this. So 20 marks have been allocated, 10 on the business risk and 10 on the significant risk of material misstatements which should be evaluated. So let's first start with business risk and then get down with the significant risk of material misstatement. And the first break in the session will come after approximately 15 minutes. That's like 7 p.m. the Pakistan Standard Time. So any one of you requesting the break will come, but it will be at 7 p.m. Pakistan Standard Time. So that's approximately 18 minutes from now. Okay, let's start to drill down the question. Okay, I'm reading the question and we'll just keep raising the points so I can give you an idea of how to identify a business risk. Please remember my steps. The first step is to identify an issue which you think is capable of having an adverse effect on the business objectives. Let's find the issue. You are a manager in the audit department of Dove and Company, responsible for the audit of the Sunshine Hotel Group, the group for which has a financial year ending 31st of December. The group operates a chain of luxury hotels. Industry specific risk. Operates a chain of luxury hotels. That's number one. Industry specific risk. Please note this down somewhere with you. The group operates a chain of luxury hotels. Number two, and is planning to expand its operation over the next 3 years by opening hotels in countries with increasing popular tourist destinations. They're planning to expand operations over the next 3 years. We need to see how wise or how unwise this strategy is. So first of all, they're operating a chain of luxury hotels. So we need to see what are specific risks associated with luxury hotels. And secondly, they're planning to expand its operation over the next 3 years. So we need to see, is there anything wrong with expansions in the next 3 years? Uh, is it a wise strategy or is it an unwise strategy? Okay, let's go down and see more information. So far we got two informations from the case study. Okay, number three, background information. The group owns 20 hotels, all located in the popular beachside hotel resorts. The hotel operates on an all-inclusive basis, whereby guests can consume unlimited foods and drinks, and take part in a variety of water sports, including scuba diving, as part of the price of the hotel. Each hotel has at least 4 restaurants and a number of bars. The Sunshine Hotel brand is a market leader with significant amounts spent each year on marketing to support the brand. Significant amount spent each year on marketing to support the brand. Obviously, luxury hotels, very costly to maintain. Luxury hotels, profitability is not very attractive because there is a lot of operating cost, there is a lot of administrative cost, significant amount spent each year on marketing to support the brand. So that means a lot of pressure on operating expenses. The hotels are luxurious and maintained to a very high standards and are marketed as exclusive adult only luxury hotels. So see the operating cost, not just the marketing. They are luxurious and maintained to a very high standard. So when you maintain them at a very high standard, imagine the cost, imagine your operating expenses, and imagine the impact which is going on your profitability. Right? So far we identified 4 problems. Number one, they are operating a luxury hotels. Number two, they have a strategy to expand. Number three, a lot of cost is spent on marketing. And number fourth, they have to maintain a very high standard. Next para. When customer book to stay in the hotel, they are charged a deposit equivalent to 20% of the total stay, and a further 20% is payable 8 weeks before arrival. The remaining 60% is settled on departure. If a booking is cancelled prior to a week before the guest stay commences, then a full refund is given, but no refunds are given within the week leading up to the guest stay. So 60% is settled on departure, 40% is received in advance. So if you think about the cash management of this hotel, a lot of cash comes when a lot of cash comes at the time of departure. So you have to wait very long. You have a very long waiting time for that. So if you look at the cash management of this hotel, it's a bit problematic because most of the cash inflow will come at the time of departure. And during the year, they need a lot of cash for expenditures. They need a lot of cash for spending on marketing, on maintaining the high standard. Even though in this paragraph there is an IFRS 15, which we will be utilizing once we go to the risk of material misstatement. But if you look at this paragraph from a big business angle, this paragraph is more from the view of cash management. Their cash management is a bit more problematic. Okay, then you go down. The group has seen continued growth, which is very good, with revenue for the year projected to be 125. Last year revenue was 110, and profit before tax is $10 million. The last time the profit before tax was $9 million. So we have to use these numbers very carefully when we are answering a business risk. You can identify the operating profit margin. The examiner has given you the profit number, and the examiner has given you the sales number. So you can easily identify the OPM, the operating profit margin, and you can see, is there a decline in the operating profit margin, which itself is capable of becoming a business risk. Okay, according to the latest management accounts, the group total assets are currently 350. You know why the examiner gives you the total assets? Because he wants you to calculate the materiality. The Sunshine Hotel brand is not recognized as an asset in the financial statement because it has been internally generated, which is right. The group has a cash of 20 million. Most of this cash is held on short-term deposits in number of different currencies. So a lot of risk of material misstatements, a lot of risk of material misstatements. Cash which is held in short-term deposits in a number of different currencies, more like IS-21, more like a risk of material misstatement, which will come later in the answer. Okay, that means let's go down. The current gearing ratio of the group is 25, which is very low. Let's see whether this gearing ratio will increase on the next page. But currently the gearing ratio is just 25%. Okay, the last few paragraphs. In January 17, the group entered into an agreement with an internationally acclaimed restaurant, Molin, to open new restaurants in its five most popular hotels. The agreement cost $5 million, last for 10 years, and allow the group to use the restaurant name, adopt the menus, and decorate the restaurants in the style of Molin. The cost is $5 million and is recognized within the marketing expense. This is again an accounting treatment because we need to recognize this as a license and we need to treat it like a license. They have treated it like a marketing expense. This is a wrong accounting treatment. So that has nothing to do with the business risk. Okay, the next paragraph then. Part of the group's strategy is to expand into new countries. And in July 17, the group purchased land in 3 new locations in Farland at a cost of $75 million. There are currently no specific plans for the development of these locations due to political instability in the country. See your investment. You have invested $75 million, but there is a political instability in the country. So that was a very unwise business strategy because there is a political instability and you have done an investment and you've done an investment of $75 million. The next point, in addition to the Farland acquisition, the existing hotel complex was purchased from a competitor for $23 million. You purchased another hotel. The hotel complex is located in a country where local legislations prohibits private ownership and use of beaches. So the group hotel guest cannot enjoy the private and exclusive use of beach, which is one of the group key selling points. So you have made an investment against your key selling point, which is which which is one of the group key selling points. So the guest cannot enjoy the private and exclusive use of beach, which is one of the group key selling points. So why have you done this investment when it is against your business objectives? So first of all, you spend $75 million in a country where there is a political instability. And then you spend another $23 million, which is against your key selling points. So very unwise strategies here adopted by the group. Okay, the next. For the reason the group has not yet developed the hotel complex. So that's like a wasted investment. You have not yet developed the hotel complex and is currently being used as a location for staff training. All of these assets are recognized at a cost. So again, after this is all the accounting treatments. I am not reading this paragraph more because it involves more of an accounting treatment. The last 2 lines. The group is planning to invest in alternative locations with capital expenditure on sites in new locations of $45 million. So group is thinking about more capital expenditure now. And this time they're thinking about a capital expenditure of a $45 million. And this will be funded from an undrawn facility at an interest rate of 3.5% per annum. So now your gearing risk will increase, right? Your gearing risk was 25, but that will add on $45 million. So a further $45 million will increase your gearing risk, and you can calculate the finance cost, 3.5% per annum. That will increase your finance cost, and the finance cost will bring pressure on your operating profit margin. So a lot of business risk coming in the last 2 lines. And then you go down the last paragraph. 2 of the group hotels are located in an area prone to hurricane, and unfortunately, only last week a hurricane caused damage. Another business risk, hurricanes. And the bad thing, only last week there was a hurricane. which caused damage. And it's very, uh, the damage caused by the hurricane is not easy to repair. It takes a lot of time, and your business operations will be affected at those two locations, and your sales will be affected at those two locations. And a lot of customers will be dissatisfied. Might be that the customers ask for refunds and something like that. And then the last paragraph. The group lawyer has received a letter from Ocean Protection, a multinational pressure group which aims to safeguard marine environment. Ocean Protection is claiming that our hotel guests are causing environmental damages. So we are getting a claim. We're getting a claim from a pressure group, and the value of the claim is in the next paragraph. It is $10 million. So we have a lot of reputational risk, because if a pressure group is claiming, then anything associated with a pressure group can cause a lot of damage to our reputation. See, I just went quickly through the case within the constraints of the time. We had 10 marks, and we have to divide the 10 marks with 1.5. So approximately we have to find 7 business risks. And I think I found more than 7. If I just take a quick scan of the business risk and then get to a break and then start writing the answer after the break, if you can just keep any paper with you and just scroll down these business risks. Number one, they operate a chain of luxury hotels, right? Number two, they have a strategy. They have a strategy to expand, and we've already seen that strategy was not very good in the page 2 of the case study. Then number three, a significant amount spent on marketing each year, and they have to maintain a very high standard. Then number fourth, most of the cash comes on the departure of the customer. So a very, very tough looking cash management of this hotel. Then the gearing ratio is currently 25, but you have seen that they're taking a loan of $45 million, which will increase the gearing ratio of this group. Then on the next page, we got very bad strategy. They have invested $75 million in a country where there is a political instability, and they've spent $23 million in buying a hotel which is against their key selling point. Then they are taking on a new loan of a $45 million, and then there was a hurricane, and followed by the hurricane, there was a letter from the pressure group. So quite many business risks, right? I have skipped some paragraphs because it has the risk of material misstatements. So right after the break, I'll be starting writing the answer for business risk, and followed by the answer on business risk, where I have to demonstrate you how to write a proper business risk answer. I will then get down to risk of material misstatement. I will tell you key facts about risk of material misstatement, and then I will be doing drafting on the risk of material misstatement. So this break is approximately for um, 15 minutes. It's a namaz break, so I'll resume back at 7:15. And from 7:15 to the end of the session, 8:45, there will be no further breaks. So take a break, relax your mind, come back, and we'll start drafting the business risk answer. Okay, and in the break, please read the case very effectively. So right after the break, you have the case in mind, and I will be taking the Word file and I'll directly start writing the answer. So please ensure all of you have read the case very well, because I will be writing the answer right after the break. Okay, take a break and come back into the live session after 15 minutes, 7:15 p.m. Pakistan Standard Time. Okay, welcome back from the break. Starting on with the live session. And now the purpose is to drill the business risk answer before I start drilling the risk of material misstatement answer. Okay, let me take on my Word file, and I have already given you a sketch answer, but I have to drill the answer. All of you have got this sketch answer, which contains uh, the number of risk which we have identified from the case while we were reading the case, and followed by that is the risk of material misstatement. Now I have to take these points, and on a sample basis I have to convert these points to business risk so that you get a clear answer of how you would be writing the business risk answer. Okay, let's start on with the exercise. Now first of all, you are writing the answer in a form of a briefing note, right? So you are writing this to John Starling, comma, who is your audit engagement partner. So you're also learning to write the briefing note, audit engagement partner. This has been written from the audit manager, and the subject while you're writing this briefing note is the Sunshine Hotel Group audit planning. You got an email, right, from the partner, so you're replying back to the email of the partner. To from subject. After that, you write an introduction. Now, introduction is basically the purpose you're writing this briefing note. And if you go back to the exam paper, just to know the purpose, you have three purpose. The three purpose is you need to evaluate the business risk, you need to identify the risk of material misstatement, and you need to discuss the implication for planning the group audit, and you need to perform the procedure. Basically, you have to do three things here, right? A, B, C. So you're writing a briefing note for all the three requirements. So I'll basically sum up the three requirements in the introduction. See, how would I be doing that? You go back to the Word file and you say introduction, and under the introduction, you write the purpose. These briefing notes relates to the initial audit planning of the Sunshine Hotel Group for the year ended 31st of December 31st of December 2017. The last line. These notes contains the evaluation of business risk, the significant risk of material misstatements, significant risk of material misstatements, to be considered in planning the audit. Further, the notes contain the implication of the email received from the group finance director and the audit procedures on the claim, audit procedures on the claim from ocean protection. So these are basically the three requirements, right? And in these three, I just sum up the three requirements in writing the introduction. So you are also learning how to write in a briefing note. So to, from, subject, introduction. Now comes the first heading, which is the heading number A. And in the A heading, I have to write business risk. And how many I have to write? 7, because I have 10 marks. See, how would I start writing under the heading of business risk? My first business risk under the heading would be luxury hotels. That would be my first business risk as identified from the case study. See, how would I write it? The group operates a chain of luxury hotels. That was given in the case study. The group operates a chain of luxury hotels. This itself creates a business risk. This itself creates a business risk as the group activities, it this itself creates a business risk as the demand for luxury hotels or the demand for luxury holidays will be sensitive to economic problems like recessions and recessions which can affect the travel and tourism, which can affect the travel and tourism, or any increase in oil prices, which can affect the traveling cost. Thus, any such events can have effects on group profitability and overall sales, overall revenue. See, they are operating a chain of the luxury hotels, right? And for that reason, that is basically an exclusive market, or that is basically a niche market. Now we know these luxury hotels or luxury holidays have a very strong correlation with the tourism industry, and the tourism industry has a very strong correlation with economic conditions. So any fluctuations in economic conditions can really have an effect on the tourism, and the tourism can have a really bad effect on the luxury hotels. So thus any such events given above can have effect on group profitability and overall revenue. See, where I got this risk from the nature of the industry, from the nature of the business model, from the nature of the business model. So that's the number one risk, right? Then the second risk I identified you prior to the break was business expansion. Business expansion. Now, first of all, they were thinking about expanding, and the expansion seems very inappropriate, right? You have read the case with me. So I would say it is it is questionable whether the group has sound policy on expansion, given given the problem given the problem with recent acquisitions, given the problem with recent acquisitions. I hope you remember, right? The recent acquisitions had a political problem, and the recent problems had problems with the local regulation, which was against your key selling point. Okay, so it is questionable whether the group has a sound policy on expansion given the problem with recent acquisitions, primarily due to political conditions, primarily due to the political conditions and the local regulation and the local regulations, which seems incompatible with the group key selling point, or which seems incompatible with the group business objective. I hope you remember that local regulations, that you cannot have the private use of the beaches, and the local regulation which seems incompatible with the group key selling point. So you have already done acquisitions, which is questionable because none of these acquisitions or none of these investments have given you any returns. First, because of the political conditions, then secondly, because of the local regulations. Now you will tell examiner, the group has invested $98 million, accounting for 28% of the group total assets. So see how significant the investment was. You have invested 98 million and it is giving you nothing, which is accounting for 28% of the group total assets. And seems the group has invested 98 million, accounting for 28% of the group total assets, and this seems to be very unwise business expansion, which is so far giving nothing to the group. So very inappropriate business expansion, right? Very inappropriate business expansion. Mehek Madad Ali, the oil prices have a very strong correlation, right, with the tourism industry, because the oil prices have a knockdown effect on the airfares. If you know the air transports are directly correlated with the oil prices. Any effect in the oil prices brings a knockdown effect on the oil prices, and oil prices are linked with airfares. Airfares are linked with tourism. So if there is any changes in the airfare, it changes your plans for tourism. It changes your plans for holidays. And yes, Usman Farooq, we can use the percentage we can use such percentages like 28% of the group asset, even in case of a business risk, to make our point justifiable that they have invested $98 million. Okay, so business expansion seems very inappropriate. You have already invested like a $98 million on in two areas, and it is giving you nothing. Okay, number three problem I identified with you in my session was the business expansion, was the finance needed. Gearing, we need to incur $45 million of expenditure, and for $45 million, we need to have a loan at 3.8%, right? At 3.8% markup, we need a business loan. We need a loan, sorry. So the group is planning, a further capital expenditure, of $45 million. This is 12.9% of the group total assets. So see how important that is. This is 12.9% of the group total assets, and this requires using an undrawn. I'm just going back to the case for 1 minute. Uh, Going on the page number 2, this will be funded entirely from an undrawn borrowing facility. Then this requires using an undrawn borrowing facility at a markup of 3.5% per annum. 3.5% per annum. Thus, this borrowing facility, this borrowing facility will increase the current gearing ratio, will increase the current gearing ratio. Thus, this borrowing facility will increase the current gearing ratio, which is at present 25%. So your gearing ratio will increase, right? Thus, the borrowing facility will increase the current gearing ratio, which is at present 25%. Further, this will increase the finance cost of the group. That is, show the working of the finance cost. How much loan are we taking? $45 million. And what is the interest rate? 3.5%. So that's approximately $1.6 million per annum. $1.6 million per annum will be the increase in the finance cost. So further, this will increase the finance cost of the group by $1.6 million, which is 16% of the group profit before tax. So your finance cost will increase by $1.6 million when you take on this new loan. And because of the increase in finance cost, which is 16% of your group profit, there will be a pressure on your profitability, which is 16% of the group profit before tax, hence will increase pressure, hence will increase pressure on group profitability. See how I got the point of the capex converted into gearing and gearing converted into the finance cost. See how am I using the percentages? How am I using the numbers? Wherever possible, use them. Okay, after the finance needed, let's make a point on the profit margin. Have any one of you calculated the profit margin of this group? See, the profit margin of the group is not very attractive because they're operating a luxury hotels, and the profit margin has gone down from the last year because they need to maintain standards. Their operating cost is very high. I spoke of that right prior to the break. A lot of marketing expense, a lot of operating cost. So I hope you have determined the profit margin. The profit margin of the group has gone down from 8.2% in 2016 to 8% in 2017. This shows that there is a lot of pressure on the group profitability due to high cost, due to high cost of maintaining the standard of the luxury hotel, standard of the luxury hotel, and high advertising cost to promote the brand name, to promote the brand name. You are operating a chain of the luxury hotels, right? And because you're operating a chain of luxury hotels, you have to be very specific that there is a lot of operating cost. And this shows that there is a lot of pressure on the group profitability due to high cost of maintaining the standards of the luxury hotel and high advertising cost to promote the brand name. Then the last one, cash management. I speak I spoke of the cash management right prior to the break. You need a lot of cash because majority of the cash you receive from the customers, you receive them at the time of departure rather than when you book the hotel. Only 40% is received at the time of booking, 60% is received at the time of departure. And you also need to do refunds because there was a hurricane. So hurricane can result in many refunds, and it's very costly. It's very costly to maintain the luxury hotels, right? So you need a lot of cash inflows. You need a lot of cash on hand. It's Shahrukh Alam. It's not possible to calculate the current ratio in this question. Had it been possible, you could have. But currently, in this case, it's not possible to calculate the current ratio. So the cash management, the cash management could be problematic for the hotel, for the group, as most of the cash is received from customer at the time at the time of departure. At the time of departure, cash is needed to pay refunds to customers affected due to hurricane, affected due to hurricane, which is very natural because whenever there is a natural disaster affecting the hotels, you need to pay refunds. Cash is needed to pay refunds to customers affected due to hurricane. Further, cash is needed for aggressive marketing, the administrative expenses of maintaining the luxury chain of hotels. So I personally believe that for a hotel like such, cash management is like very difficult because a lot of cash comes to you at the end when the customer departs, and throughout the year there is a lot of cost you have to incur. Right, so see how I am making the points. I made points for luxury hotel, I made point for inappropriate business strategies, I made point for the finance cost, I do made point for the profitability going down for the hotel. Luxury hotels will not have very attractive OPM. This is true. And see, the OPM of this hotel is just 8%. Okay, one and two more examples and then exiting from business risk. uh, They were getting claims, right? They were getting claims from the Ocean Group, which can affect the business reputation. And then there was hurricane, which affected their business operations, right? So hurricanes, the effect of the hurricane, which affected two of their hotels, could be significant for the group as the hotels will take time. Hotel will take time to be refurbished. The hotel will take time to be refurbished and put back into operations. the projected revenue from these two hotels, the projected revenue from these two hotels will be affected till the time they are closed for operations. Further, there will be a high cost of repair and maintenance. There will be a high cost of repair and maintenance to bring the hotel back to resumption. Obviously, you're operating a luxury chain of hotel, right? So because of the luxury chain of hotel, you need to refurbish them back to the standard. And when they're back to the standard, they will come back to resumptions. So it can affect your revenue till the time the hotel are back. And a lot of cost will go down in repair and maintenance to bring back hotels resumption. So that cost, the repair and maintenance cost, the repair and maintenance cost will affect the profitability, and already your sales forecast will be affected. Okay, just one last drafting of business risk and I'm exiting from this. The claim which you got from the ocean protection, claim from ocean protection, the pressure group, that's very simple. The claim of $10 million from ocean protection, which is a fill in the blank percentage of the group profit before tax. The claim of a $10 million from ocean protection, which is the fill in the blank percentage of the group profit before tax, is very significant. The claim from the pressure group can affect the business reputation, as the pressure group can exploit the Sunshine Hotel, as the pressure group can exploit the Sunshine Hotel through media campaigning. So there is a lot of risk, right? If the pressure group takes on to the media, it can affect your reputation, which could be very damaging for the business. Right? See my points. I almost wrote 3, and on the top page I wrote 4. I almost wrote 7 business risk, and for 10 marks. See, some of the draftings were more, some were less. It depends upon the point you're raising. Sometimes because you're raising a point which needs a lot of numbers, or sometimes you're raising a point where to build up the story, you need a bit of space. So see, my drafting is very variable. In some places, my drafting is more. In some places, it's less. But I hope you remember the steps I have given you. Right, so the steps I've given you at the beginning of my lecture, see, have I followed them? See the steps on your screen. Step number 1, identify from the case the issue, which I did. The issue which is capable of having an adverse impact on the business objective. I wrote that. Adverse impact can be in present or in future. So you were incurring the capital expenditure, which in future will increase your finance cost. So that finance cost point was not in present, right? Because you were planning to incur a capital expenditure. So in future, your finance cost will increase. Then how much to write? 7, step number 4. And see step number 5, marks. A 0.5 marks for identifying, 1 mark for explaining why it is a business risk and its adverse effect. And I've not taken any hypothetical assumptions. So I've given you all 7 business risks. I hope you got a clear clarification of how to write them. You got a clarification of how to write them. Uh, Saad, I could not understand your question. You're saying the claim is trivial. How come the claim is trivial? The claim is of $10 million. The claim is of $10 million, right? And the profit of the group itself is $10 million. So how come the claim is trivial? Trivial means something which is very insignificant. Yes, every industry has a risk, right? Pharmaceutical industries, fashion industries, technological industries, banking industries. You do them in the SBL exams, industry specific risk. Every industry has a specific risk, and that is a very important risk for every industry. So a nature of business in which you are itself creates a risk for you. So that is enough of the drafting right on the business risk. Now I am taking on the side of the risk of material misstatement, looking at the same exam question, December 2017. Now see where you end the answer. You were writing a briefing note, right? So where you end the answer for business risk, you will take the next heading, B, and in the B heading, you will say risk of material misstatement. Now let's first give you a bit of knowledge and then come back starting to write risk of material misstatements. So I purposely wrote 7 business risk, right, to show you that this is the answer you should be writing for 10 marks. Okay, let's go back to the presentation, start understanding what is the risk of material misstatement. Okay, back to the presentation, looking at the risk of material misstatement. Okay, first of all, in terms of risk of material misstatement, identify a situation which gives rise to risk of material misstatement. Now, just like a business risk, you have to identify a situation which gives rise to risk of material misstatement. Which situation? A situation can be a risk of management bias, internal control issues, specific accounting treatments. Because you know that the risk of material misstatement includes the inherent risk and the control risk. So the risk of material misstatement can arise from any risk which relates with the specific accounting treatment. It relates with risk of management bias and it relates with internal control issues. Right? So which situations can give rise to business risk? Either a risk of management bias, internal controls, or specific accounting treatments. Now I'll just be demonstrating that on the Word file. Remember, the risk of material misstatement does not include a detection risk. It only focuses on inherent risk and control risk. Detection risk comes in audit risk, right? And we are attempting a question on risk of material misstatement, which only includes inherent risk and control risk. So I'll be performing a question and I will be illustrating that on the Word file, that how you identify a risk of material misstatement from within a case study. And as per the new marking scheme, each risk of material misstatement is now worth 2.5 marks. I hope you remember that the examiner used to say identify and explain 4 risk of material misstatement in the older questions. And at that point in time, the marking scheme was 2 marks per risk of material misstatement. Now, since December 17 exams, because December 17 was the latest ROMM question, and the examiner in the marking scheme is very clear that for each ROMM, you will get 2.5 marks. So you have to take the latest marking schemes in the exam paper. So the latest marking scheme for ROMM is now 2.5 marks. Now, let me illustrate something for you, then come back writing the answer. Okay, I just illustrated for you at the beginning of the session the business risk, right? Now let me illustrate for you the ROMM before I start writing the answer. Okay, let's do a quick exercise on ROMM, risk of material misstatement. Okay, now when you look at an ROMM, risk of material misstatement, you have to keep in mind some very important points. Number one, the risk of material misstatement can arise from an accounting treatment. So if you think there is a wrong accounting treatment in a case study, then a wrong accounting treatment can give rise to a risk of material misstatement. So you have to think whether the accounting treatment is right or wrong. And a wrong accounting treatment in a case study will give rise to a risk of material misstatement. Secondly, the risk of material misstatement would come from internal controls. If you think the internal controls are weak in a question, in a case study, then there is a risk of material misstatement associated with weak internal controls in the case study. So if the examiner gives you something about internal controls and there are weak internal controls in the company, then you can also identify the risk of material misstatement. Number three, the risk of material misstatement can come from situations where there is a risk of management bias, where management has a chance of doing creative accounting. Risk of management bias, where you think the management can do window dressings, where management can do creative accountings. Risk of management bias. There are many situations in past papers where there is such a risk. Like, for example, if the company is seeking a loan from a bank, then because they're seeking a loan, there is a high chance they can manipulate the financial statements to show a better position. Then secondly, risk of management bias can be because the company is listed. Because if the company is listed, for a listed company, there is an opportunity because you have to deceive your investors. So generally, the listed companies have a higher risk of management bias. The management can manipulate the results to show better performance. So suppose the directors are paid bonus on the basis of company's performance. So if directors are paid bonus on the basis of company's performance, then there is a chance of a management bias because the directors are paid bonus. They can manipulate the performance to get higher bonuses. So there are situations in case studies where you think there is a chance of a bias. There is a chance that the management can manipulate the financial statements to show better performance. So accounting treatments, internal controls, risk of management bias. Then few of the last things. Because you're attempting a question on risk of material misstatement, you have to be very clear about materiality. We even calculated materiality in business risk just to give emphasis. But you have to determine the materiality because you're doing a question on risk of material misstatement. where possible, you cannot force the materiality, but where possible, you will calculate the risk of material misstatement by telling examiner material, material. So wherever possible, you will determine the materiality. And the most important thing is you need to identify the risk, because you're doing a question on risk of material misstatement. Risk. You cannot end the question without risk. Now, you know the risk is basically understatement, overstatement. Something can be understated, something can be overstated. Risk of material misstatement. See, we never use these language in the business risk answer, but because these are the risk of material misstatements. So what is a material misstatement? When something is understated, when something is overstated, that is the risk of material misstatement, right? Or financial statements could be materially misstated. Financial statements could be materially misstated. Like a disclosure. Suppose a disclosure is not given. So if a disclosure is not given, it cannot understate or overstate something. But if a disclosure is not given, then you will say the financial statements is materially misstated because the disclosure is not given. If the internal controls are weak, because of the weak internal controls, the financial statements could be materially misstated. But if the share-based payment expense is not recorded, if the share-based payment expense is not recorded, then I cannot say financial statements could be materially misstated. If the share-based payment expense is not recorded, I will say the expense is understated. And I'll say the equity is understated. Equity is understated, expense is understated. Right? So this is a summary on in front of your screen, which just demonstrates you what basically is an ROMM. So if you attempt a question on audit risk includes the risk of material misstatement, right? But it also includes the detection risk. You can see my previous webinars for detection risk. But currently we're focusing on risk of material misstatement, which includes the inherent risk and which includes the control risk. And I've just sum up them in front of your screen. Okay, let's go back to the same Sunshine Hotel company and see what are 4 risk of material misstatements within the case study. Okay, from here. Now already the sketch answer, which is shared with you, the sketch answer contains some risk of material misstatements. In front of your screen, this is an answer shared with you. Almost 7 have been identified as like bullets for you to think. Out of the 7, I will be writing 4 of them to demonstrate you how would you be writing in the answer. So I'll be taking the first 4 of them in writing the answer, and on the basis of that you will write number 5, 6, 7. Okay, let's start drafting the answer for the risk of material misstatement. Number 1, revenue recognition was the first major risk in this question, because 40% revenue is received in advance and 60% at the time when the customer departs. So there is a high risk that you record the 40% advance as your income, whereas the 40% advance should be treated as a unearned revenue or as a deferred income. So there is a high risk that the 40% advance you receive from customer is recorded as your income. Let's see how to write the answer for revenue recognition, which is in the case study. The group revenue could be overstated due to timing issues related due to the timing issues related to the recognition of revenue. 40% is in advance and 60% is at the time of the departure, right? So the group revenue could be overstated due to timing issues related to the recognition of the revenue. 40% of the revenue, 40% is received in advance, and the group has to refund and the group has to refund bookings which are cancelled a week before, a week or more, a week or more before a guest is due to stay at hotel. Under a week, you can record the revenue because you have no obligations to refund. But the customer can be refunded a week before or more than a week before. So 40% is received in advance, and the group has to refund bookings which are cancelled a week or more before the guest is due to stay. So you cannot record it as your revenue because you have an obligation. So there is a risk that the revenue is recognized. There is a risk that revenue is recognized when deposit, when the advance deposit is received. When the advance deposit is received as per the relevant financial reporting standard, as per the relevant financial reporting standard, revenue can only be recorded when performance obligation when performance obligation when performance obligation is met. And when will the performance obligation be met? Less than a week, because a week and more you still have an obligation to refund. You cannot record it as your revenue. But less than a week, now you cannot refund, so you can record it as your revenue. So see the timings, right, of recording the revenue. So as per the relevant financial reporting standard, revenue can only be recorded when performance obligation is met. No standard reference, right? No standard reference, because the examiner is very clear on that. See this, no standard reference, no as per IFRS 15. See this, accounting issues article. And in the accounting issue article, the examiner is very clear. See this in front of your screen, read yourself. See this, examiner article. No credit is awarded for the name or number of the auditing and financial reporting standard. No credit is awarded. Examiner is only writing it in the answer for the sake of your knowledge. But in the exam paper, examiner is saying a big no to the student. No credit is awarded for the name or number of the auditing and financial reporting standard. And see the source. See what's written on the last line. Written by a member of the P7 examining team. This is the article which I have recommended you in the session to read, right? The exam technique part 2, part 3. This is basically part 3. So everyone should be clear, right? I didn't put the reference of IFRS 15. So first is the revenue recognition, right? Second is the foreign exchange. I hope you remember there was a cash foreign exchange. They had a $20 million cash, which is held in different foreign currencies, right? I'll be exchanging answers of the questions, right, in the last 15 minutes of the session. So till 8:30, I'll be in the drafting phase. From 8:30 to 8:45, I'll be taking as many questions as possible and responding to as many answers as questions as possible. So give me the last 15 minutes, right, to respond to many of your questions very clearly. Foreign exchange, I hope you remember they had a $20 million cash. So you will say the group holds $20 million cash at the year end. That was on the first page of the question paper, which is held in foreign currencies, which is held in foreign currencies. So the moment you see the foreign currencies, you will think about the IS-21, most of which is held in the foreign currencies. Now see, you need to find out the materiality. This is this represents 5.7% of the group assets, thus material to the financial statement. Thus material to the financial statements. The at the reporting date, which is basically the year end, at the reporting date, the foreign currency amounts should be the foreign currency amounts should be reported using the closing exchange rate. See, I wrote the treatment, but I didn't write ICE 21. If wrong exchange rate is used, it could overstate the cash balance. It could overstate the cash balance and the exchange gain full stop. See, I wrote the risk of material misstatement. I wrote the treatment, I wrote the materiality, and I wrote the under and overstatement. This is number 2, right? Then the third one, that was on the second page of the case, where you had an agreement with Molin and you treated that wrong. The agreement with Molin, you treated it as your marketing expense, rather that agreement with Molin was a license and it should be recognized as an intangible asset. It should be recorded at a cost and it should be amortized. See this paragraph, read this paragraph very carefully. See this in front of your screen, the first para in January 17. In January 17, the group entered into an agreement with an internationally acclaimed restaurant chain, Molin, to open new restaurants in 5 most popular hotels. The agreement cost $5 million and last for 10 years. The agreement cost $5 million and last for 10 years. So it should have been recorded as a license and should be amortized over 10 years and allow the group to use the restaurant name. But you have the cost of the 5 million has been recognized within the marketing expense. So that means the marketing expense are overstated. After a period of refurbishment, the new restaurants opened in 1st July. When the restaurants opened? 1st July. So from when will you start the amortization? You will start the amortization from the 1st of July. So when we got the license? We got the license in January 17. But when will we start the amortization? From July 17. So how much is the cost? How much is the duration of the license? 10 years? But will we amortize the license on 10 years or will we amortize the license on 9.5 years? Because in Jan we got the license. In July we started operating it. So should we charge amortization from the date we got the license or from the date we started using it? Yes, 9.5 years, right? Not 10 years, because we got the license for 10 years, but we started using it from July. See how you write a point for Molin license. They did a wrong accounting treatment, right? Number three, the license agreement. The license agreement. The cost of the agreement, the cost of the agreement with Molin is 1.4% of the group assets and is 50% of the profit for the year. Thus, it is material to the profit, it is material to the financial statements. See, the cost of the agreement with Molin, $5 million, is like 1.4% of the group assets and it's like 50% of the profit for the year. It is material to the financial statements. The agreement appears to be a licensing agreement. The agreement appears to be a licensing agreement and should be recognized as an intangible asset at cost and amortized over a period of 9.5 years from July 2017. It should be amortized, right, over a period of 9.5 years starting from July 17, not from Jan 17, right? So now you can show examiner the recalculations here. Thus, at present, the intangible assets are understated because you've not recorded them as intangible assets. Thus, at present, the intangibles are understated and the amortization expense is understated because you have not recorded any amortization. Thus, at present, the intangible assets are understated because you have not recorded any intangibles and the amortization expense is understated. Right, and thus at present the intangible assets are understated and the amortization expense is understated and the marketing expense, because you've recorded it in the marketing expense, right, and the marketing expense is overstated because you recorded the $5 million in the marketing expense. So full stop, you wrote your risk. Now if you want to make an impression, you will write this in the red. The annual annual amortization expense over 9.5 years will be $263,158. How you got it? $5 million divided by 9.5 years multiplied by 6 over 12. 5 million was the cost of the license, 9.5 years and into 6 over 12. So how much is the amortization for 6 months? Because the year end is December, right? The year end is December. So we have to charge it from July to December, 6 months. The annual amortization expense over 9.5 years will be, show the full number, will be $526,316. However, for 6 months till the year end, dollar 263,158 should be charged. So for 6 months, how much you will charge? 263,158. For the full year, it's 526. But we are charging from July to December, right? So we will only be charging the 6 months amortization, which is 263,158. And in the bracket, you show the calculation to the examiner. That is a very impressive way of writing the answer. Okay, the last one I am writing for you is impairment. You saw the question before the break. We have done investments of like $98 million, and there was a political disturbance. And we have done one investment which is against the objective of the hotel. So should we be testing the $98 million in terms of the impairment? So the last point you will be writing is the point for impairment. Makes your complete 4 risk you need. Impairment of non-current assets, which is basically the second paragraph right on the page 2 of the case study. The sites acquired at a cost of $75 million represents 21.4% of the total assets. You did an investment, right, where there was a political disturbance, and political disturbance is an indicator for impairment. So the sites acquired at cost of 75 million represents 21.4% of the total assets. And the hotel complex acquired at $23 million is 6.6% of the total assets, thus material to the financial statements. Impairment. So we had 2 investments, right? One being $75 million and the other being the $23 million. I hope you know where the numbers are coming from. After that, you say there are risks associated with the measurement of these assets, There are risks associated with the measurement of these assets, as the assets could be impaired. Why? The assets could be impaired because none of the assets is currently being used by the group. For one problem is the political uncertainty. The second problem is that the acquisition you did for $23 million, that was against your business objective. So because none of the assets is currently being used by the group, and there are indications that their recoverable amount may be less than their cost. The recoverable amount may be less than their cost. If no impairment review is performed, it could overstate the non-current assets. And understate operating expenses. See, this is a 20 marks answer now. 10 marks for business risk. And 10 marks for risk of material misstatement as per the new marking scheme. See the length. I'll be sharing this answer on the WhatsApp group. That is the reason I wrote it, because I want to write answers this time in the practice to pass session, because I really want to give you uh, a way of writing the answer. See where the answer started from. Let me show you the proper answer. See, it started from December 17, question number 1. Then we wrote 2 from subject. We wrote the introduction. After that, we wrote the business risks. See the format. 7 business risks. You can read them, how I wrote them, once you get this handout. Then after that, I wrote four ROMM, because every ROMM is worth 2.5 marks. That marking scheme is given in my presentation. Now, after that is the C part, which we are not attempting, but then you have to write in the C part. Sorry, C part is after the impairment, sorry. You have the impairment. Where the impairment ends, then you have the C part. C, right? The C part, whatever that is basically the implications on planning, because of the email received from finance director. And then in the C part, you have to write, this is basically C1, right? This is C1. You have to write in the implications. I'm just completing the format, right? Then in the C2, C2, right? Then in the C2, you have to write procedures. I'll be doing these procedures, right, in the session tomorrow, because the session tomorrow is about evidence and procedures. So I'll be drilling procedures on the same question tomorrow. So you will be getting the answer at least of the procedures, right? Procedures. And after the procedures, you will be writing a conclusion. Conclusion. So see how you end the briefing note. I'm giving you the proper format of the briefing note, right, as well. I'll be filling the procedures tomorrow when we start the evidence part in the session tomorrow. Conclusion. See how you write a conclusion of this briefing note. Yes, and I'm just coming to the question and answer session in 5 minutes, right? Just give me 2 minutes to wrap up writing a conclusion of this answer. Now, when you write a conclusion, see how you write it. These briefing note highlights that the group faces significant business risk. The group faces significant business risk, particularly those related to the inappropriate business strategy to expand. There are number of risk of material misstatements within the financial statements which should be carefully considered during the audit of the financial statements. Lastly, There are a number of risk of material misstatements within the financial statements, which should be carefully considered during the planning of the financial audit of the financial statements, and the procedures and the planned procedures for the planned procedures on claim from ocean protection needs to be carefully executed during the audit. See, you give a conclusion, right? See, you conclude that the group is facing many business risks. There are a number of risk of material misstatements which we should be carefully looking for, and then there is a planned procedures on ocean protection which needs to be carefully executed during the audit. So you started with introduction, you ended with the conclusion, and in the I have filled the A part, I've filled the B part, and I'll be filling the C2 tomorrow in the session, which is about procedures. But the focus of the lecture today was to give you a sketch answer, which you already got. But my purpose today was to show you how to draft. So I literally typed the answer. I could have saved my time by giving you a pre-seen answer, but I didn't did that because I want to type and show you how you write the answer. Because I think that's something more appropriate. When you see happening, you start absorbing that how to go about it, So I have given you a dimension of a business risk today. I've given you a dimension of the risk of material misstatements today. I have recommended you that you have to read 2 articles. Please ensure that the slides on a daily basis, which you are getting for these practice to pass sessions, you are going over the slides because the slides sum up the key articles. It also sums up the key concepts which we covered today in the session, and also the marking scheme, because a lot of students are asking about the marking scheme, which is already given on the slides. Each business risk as per the new marking scheme is worth 1.5 marks, and each risk of material misstatement as per the new marking scheme is worth 2.5 marks. Right, so that was it for the session today. That will be starting on evidence tomorrow. Now you have an opportunity of raising your questions, and I'll be responding to the most relevant questions which I see coming from the students. And I will also be looking at your feedback for the session today, because I planned this session a bit differently from my previous practice to pass sessions, just to ensure that you get a diversified practice. And I hope you will access my previous webinars on the ACCA Pakistan channel on the Vimeo, which will give you more insights on the drafting of audit risk, business risk, and risk of material misstatements. And this session is helping you with the December 17 answer in proper form. Okay, I'm now taking in your questions and answer sessions, and I'll also be interested in knowing the feedback. How was the session today? Those of you who have attended the session live today. Okay, do you think that business risk is a probable topic? Yes, I do. But please, because the question paper has now become all compulsory, so I would prefer that you're preparing all 3 risks. You are going into the exam hall with all the 3 risks prepared: audit risk, ROMM, and business risk. But yes, the probability for business risk is higher. Okay, then there is another question coming in. So how many past papers should we practice for 2018 exams? I'll prefer your radius of practice should be 2015 to 2018. If you practice more from 15, 16, 17, 18, the better for you. So if you're preparing for December 18 exams, I will prefer that you should practice papers from 15 to 18. Yes, a lot of students fails in 47, 48, and 49, and you fail to identify your reasons of failure. Please remember that honestly, one of the key reasons why you fail in late 40s is the why, is the lack of why in your answers. A lot of you do not explain the why answer in your explanation. A lot of time you miss the why. A lot of time your answer is not contextualized to the case study. A lot of time your answer is not adapted to the case study. So generally, if you're failing at 47, 48, and 49, there is some issue with the writing of the answer, because either you're not writing up to the mark, or you're not adapting your answer properly as per the case study, or somewhere around the questions you're losing key marks. Yes, Farhan, the business risk is all about the risk which brings impact on the business objective, and the risk of material misstatement is a risk which brings impact on the understatements and overstatements of the financial statement. So the risk of material misstatement is from the mindset of the auditor. The business risk is from the mindset of a company or from the mindset of a director. Yes, the 2.5 marks is absolute. There is no further breakdown of 2.5 marks. You can say that 2.5 marks, half a mark you will get for identifying the risk, and 2 marks is for explaining the risk, which includes the materiality, which includes the accounting treatment. So if you are taking 2.5 marks, zero point 0.5 will be to identify, and then the remaining 2 marks will be for explaining the risk of material misstatement, which includes the materiality and the accounting treatment. Uh, yes, business risk always come with risk of material misstatement. You will never find a lone business risk question. Business risk always come with risk of material misstatement. Yes, Muhammad Ali Javed, I've already explained the steps to identify the business risk. I'll be sharing this Word file on the WhatsApp group, so you can just go through the Word file and refine the Word file to get confidence on business risk. Yes, inherent risk is basically the susceptibility of an account balance to material misstatement, Farhan. Uh, Inherent risk is like an embedded risk. Inherent risk is basically like a susceptibility of an account balance to material misstatement. Dua Sheikh, there is no risk of there is no management risk. That is basically a risk of management bias. That is the proper statement. So there is no management risk, right? There is a risk of management bias, and I've given you examples of where can be a risk of management bias: when the company is listed, or when the company is taking a loan, when the directors are paid bonus on the basis of their performance, on the basis of company's performance. So management risk, you are using a wrong jargon, right? It is a risk of management bias. No need to maintain sequence, because you need to score marks in exam papers, Zahid. So if you want to write 7 business risk, you can write 7 business risk in any order, or you can write 4 risk of material misstatements in any order. So no need to follow the order. You just need to score your number of business risk or number of ROMM. Yes, the links to article are given in my slides. So and I hope the resources have been shared with you of with all the attendees attending the prepare to pass practice to pass session. And the link to join the WhatsApp group will be shared with all of you. So you can access the WhatsApp group, and in the WhatsApp group, I'll be sharing with you the Word file I'm using on a daily basis. Yes, Ali. Is it sufficient to calculate materiality only regarding to profit, or should we calculate on both? I'll prefer both to give a very strong impression to examiner. But even if you calculate on one, will not be a big concern. But at least in a reporting question, Ali, you should be calculating it on both. But in a risk question, even if you do it on one, it's not bad. But my preference would be do it on both. Yes, Zen. Mostly the risk of material misstatement comes from wrong accounting treatment, because the nature of the question we were doing today in the class was mostly around accounting treatments. But if you look at the other past papers, then you will find risk coming from internal controls and risk coming from even the management bias. Yes, the ratio calculations are very important. If the examiner asks you to utilize the analytical procedures, which the examiner did in the last sitting, September 18. In the September 18, there was an audit risk question where the examiner asked for um, utilize the analytical procedure. So when the examiner asks you to utilize the analytical procedures, then calculating the ratios are very important. Yes, examiner believes students are good on business risk, Burhan. So normally examiner test business risk very less and test ROMM more because examiner believes students are more bad in risk of material misstatement generally. Yes, Abdullah Iqbal. You can identify business risk from the company's financial performance. If there is a bad financial performance, like your profits are going down, your sales are going down, or your profit margins are going down, then you can even find business risk from your bad financial performance. Ajay, it's not learning the ISAs. Again, I mentioned that it is the application of the knowledge, not the knowledge itself, which will help you pass the exam paper. And okay, a lot of you are just seeking predictions for December 18. Uh, I try my best to put predictions on my Facebook page, but again, the paper has become all compulsory, right? So as the paper has become all compulsory, I think it's time to say goodbye to predictions because you cannot do predictions with 100% compulsory paper. Okay. Uh, No, you cannot write more than 7 points for business risk, Muhammad Osama, because every business risk is worth 1.5 marks. So you have to stick, because otherwise you will not be completing the paper. Stick to the number of points as per the marking scheme. Uh, Saliman Muhammad, can you just put your question again? Yes. Additional information can be part of the question on risk, Noman. I'll be practicing additional information in the session tomorrow because the session tomorrow is all about procedures, evidence. So in that session, Numan, I'll take time out for additional information. Uh, I'll prefer for business risk that you do find the materiality because that signify the point. Because when you take out the percentage that it is 28% of the asset or it is 50% of the profit, it do makes an impression and it do give value to your point. So I would prefer that don't refrain from determining the materiality, irrespective you're doing a question on business risk or risk of material misstatement. Yes, Muhammad Ali Javed, 2.5 marks is for each point. No, for audit risk, the marking scheme have changed. For audit risk, the marking scheme is 3 marks per audit risk. As per the new marking scheme, which came in September 18 exams, 3 marks per audit risk. So 2.5 marks per risk of material misstatement and 3 marks per audit risk. But if you identify an audit risk which includes materiality, Muhammad Ali Javed, you will get 3 marks. But if you find journal audit risk, you will still get 2 marks. So for very specific audit risk, which includes the materiality and the accounting treatment, you will get 3 marks per audit risk. But for the journal audit risk, you will get 2 marks. No, Saliman Muhammad. The answer vary from one risk to another risk. On some risk you have to write more, on some you have to write less. because there is no one hard and fast definition. So sometimes some risks are very productive and they have a lot of information. So you have to write a bit longer. So there is no definition that 8 lines are too much or 10 lines are too much. It all depends upon the case, right? So if there is a help in case, Suleiman, you have to write more. And if there is less help, then see, some of my risk also concluded on like 3 to 4 lines. And some of my risk went into like 7 to 8 lines. So it will vary, right? Yes, risk is all about negative things, right? Risk is not about positive things in the case of the exam paper. So you're only identifying the negative issues from the case, which can either be converted into ROMM or then into the business risk. Okay, Zen, should we refer in our answer any identified misstatement, which is, Zen, can you complete your question? I can only see part of your question. No, 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 not at all, Zen. Not at all, Zen. You only have to in a question on risk of material misstatement. How can you write an immaterial risk? So any risk which is material, you have to write it. And obviously, deliberately, examiner will give you all material risk in a question on ROMM. All the percentages will be material. Either it will be material by amount or it will be material by nature, like a related party transaction. The amount of the related party transaction can be less, but the related party transaction is material by nature. Mehek Madad Ali, I would prefer stick to the marks. Don't write extra, because the extra you are writing is bringing you in a pressure towards the end of the time, and probably you might not complete your exam paper. So just stick to the marking scheme rather than writing extra. Okay, I think that's enough for the Q&A for the session today, which was on business risk and risk of material misstatement. I will be meeting you live tomorrow for the day two, and the day two is on evidence. And within the limitation of the time, I tried answering as many questions as possible. And if any one of you have been left unattended, so please don't be unhappy with that, because there is a lot of constraint answering questions in the session. One last thing. I hope you had an effective session today, the practice to pass session for advanced audit and assurance. And I hope you learned some key techniques of drafting an answer on ROMM and business risk. And the resources that have been shared with you, the articles that you have to read, please ensure that you do read those articles over the span of a day tomorrow. And tomorrow we will be drilling yet another important area, which is about evidence procedures. So do join me live tomorrow on the same timings, 6 p.m. to 8:45 p.m. the Pakistan Standard Time. So you can be given a productive session tomorrow on writing evidence and procedures. Yes, one Muhammad Ali Javed, you can write one time full risk of material misstatement. Then in the bracket you can say ROMM. After that you can use the abbreviations. After that you can use the abbreviations. Okay, that is it for the session today. Thanks for joining. It's time to say you goodbye. Allah Hafiz. Have a nice day.